All right, I think with that, I'll give everyone sort of an intro. So, good morning. My name is McCain Vogel. I'm the assistant editor for No-Till Farmer. Just want to thank you all for joining us today for the webinar titled "Are You Prepared to Buy Out Your Landlord?" Sponsored by Fractal Agriculture. Discussion is going to feature four panelists who I'll let them all introduce themselves momentarily. Before we get started with the presentation, just have a couple of housekeeping items to go over. So, as Tim already mentioned to some of you, there's a Q&A icon there. Unlike past no-till farmer webinars, we're going to be kind of using that throughout the discussion rather than waiting towards the end. So like Tim said, if you have a question, go ahead and ask that right away. And the panelists will get to that as soon as they can fit it into the conversation. And then just a reminder, we're recording today's session. So in the event you want to go back and watch it again or share it with anyone, that'll become available to you within about 48 hours after the end of the webinar today. So without further ado, I'm going to go ahead and hand it over to our panelists.
All right, McCain, thank you very, very much. Good morning, everybody. My name is Tim Hammerich. I have somehow managed to make a career out of leading conversations about agriculture and food. I still don't know how long it's going to last, but we're riding the wave while it exists. I've got a podcast called Future of Agriculture, and I get to do events like this and really, really enjoy it. So technically, I'm not a panelist. I get to just be here to facilitate the true experts that are in the room, which we'll go ahead and let everybody introduce yourselves to get us kicked off. I'll give the 10-second introduction from the bio and then let you give maybe the 1-minute version, starting with Kyle here. Kyle Mayman's a partner at MBS Family Farms. They're a successful family-owned, family-operated corn and soybean operation in Plainfield, Iowa. Kyle and his family are ardent stewards of the land, leaning into sustainability, balanced, of course, with profitability. So Kyle, welcome, good morning, and tell us a little bit more about what you do there at MBS Family Farms.
Yeah, Tim, thanks for having me on the panel. Yeah, you pretty well described right there. We are a family operation. My wife, work with my wife every day, and lucky to work with my parents every day as well. And so we're multi-generational. I'm a fifth generation farmer, and I actually spent a little bit of time in industry first, and then after graduating from college, and then came back to the farm. So that's given me some perspective along the way. But operations both in northern Iowa and southern Minnesota. Been an operation of growth over time, but hopefully concentrated in sustainable growth. So yeah, looking forward to it.
Yeah, as am I. Sustainable growth. That's what we are here definitely to talk about here today. And if you didn't catch my announcement earlier, there is a poll live. We'll go ahead and reveal the results after we go through these brief intros. But go ahead and vote on that poll so that we can see the results before we move forward. But next we have Daryl Pullman, who's member coach at Uncommon Farms. Daryl has a long history of working in agriculture, providing counsel and expertise in business planning, risk management, customer service, and managerial finance. As a member coach and director of finance at Uncommon Farms, Daryl helps producers build more profitable, sustainable operations and positions them for multi-generational success. And Daryl, I'd love for you, when you introduce yourself here, tell us more about Uncommon Farms and the services you provide and to who.
Sure. Good morning, everyone, and thanks, Tim. Great introduction. I'm proud to represent Uncommon Farms as a member coach. And so we're based in Brighton, Illinois, and our charge in our business model is to help farmers build a vision for what their farm's future looks like and then help to make that vision come true. We do that through a community of experts, strategic partners, other groups, and of course the other growers that people learn from and are able to interact. And we work with the members through a full implementation of what those visions are. We pair up a coach to build accountability back and forth to their goals and vision. And then we share best practices among those peer groups. And then we couple that along with a full slate of financial and risk management solutions as well to achieve a holistic success approach.
Great. And I know Kyle and Daryl know each other well, have worked with each other. So throughout the session today, they can call each other out if they're not giving the whole story, right? So we brought on some inherent accountability in today's episode. But thank you, Daryl. Appreciate that. And then Ben Gordon on the panel as well, founder and CEO of Fractal Agriculture. Ben founded Fractal, a passive farmland investment partner that invests alongside farmers rather than competing against them for land. After serving as an infantry officer in the U.S. Army, Ben worked in ag tech, management consulting, and private equity due diligence before his most recent role leading Corteva Agrisciences carbon program. Ben, great to have you here.
Good to see you again, Tim, and good to be on with Kyle and Daryl. And that whole founder thing is often a misnomer. We get a lot of help and a lot of input, including very early from Kyle, folks like Uncommon Farms, and then a great team as well.
Awesome. Well, this is going to be a fun panel on a very, very, very relevant topic. Are you ready to buy out your landlord? What does that look like? So we've got the poll results here that you all voted on. What percentage of your rented acres do you expect to come up for sale in the next 3 years? 37% said less than 10% of the rented acreage. 43%, so the largest percentage of the three, said between 10 and 50% will come up for sale in the next 3 years. And then 20% said 50% or more ought to come up for sale in the coming 3 years. So I think a lot of us have probably heard the statistics, everything from the average age of the farmer being north of 58 years old to, the amount of farmland that's expected to come up for sale nationally in the coming years. It's a big thing. And I think the question that we're asking here is, are you ready? And what does even, being ready look like, right? And so we're going to talk a lot more about that. If you have questions, we want them to be answered here. We want you guys to feel rewarded for being here live and in person rather than listening to this recording or watching this recording later. So let's get those questions from you. There is a Q&A icon. It's two little comment things next to each other at the bottom of your screen, or at least that's what it looks like on my screen. If you click on that and ask a question anytime, we're not going to wait for a designated Q&A period. If you have any relevant question at any time that you want to see answered, we want to make sure that we can get to it. And if I see it and I know we're going to get to it later, I might hold on to it for a bit. But please feel free to ask those questions as we go throughout the conversation today. But Kyle, let's get back to this problem. I am not a farmer and you are, so I can only speak in hypotheticals, and you, this is a daily reality of you. Let's talk about this challenge of being ready for farmland and what it takes to do so. How's that problem show up for you?
Yeah, Tim, it shows up a lot of different ways. So over the years, we rent from different types of landowners, all from widowed ladies to fairly sophisticated East West Coast type of investors, and it doesn't really seem to matter if which one it is, if it's more of a institutional relationship or a personal relationship. Those relationships have a tendency to turn over, and so typically, because we are the tenant, we do get asked first, or many times we'll get asked that if we would be interested in purchasing the ground that we're currently farming. And that is, I guess, a testament, and I'm thankful for that. When we get that opportunity, it's flattering that they think enough of us to ask us first. But the problem is that if it's average age of farms, or if it's generational turnover, or if it's just more institutional in and out of investments, these types of opportunities, Tim, they always come up at the wrong time, right? Right after I've maybe purchased a farm that was nearby me, or maybe I'm not as in the exact financial position I would like to be to bring on the next farm. Because really, I don't see buying farmland as a growth strategy for me. It is actually what I do with my profits, right? It's what we do. It's an investment strategy for me, not necessarily a growth strategy. And with that, I have to be diligent with the resources that I have, and that is finite. And unfortunately, sometimes the opportunities are not. And for sure, I can guarantee you the biggest opportunities are going to come at the most inopportune time. And that's just karma, and that's what happens. And it doesn't seem to matter if it is what type of landowner it is that I have. I just had a recent one that was a fellow that lives in LA and was just looking to change his portfolio around a bit. It's not necessarily always, a retired farmer that passes away and now is left it to his 4 kids. It's not always that turnover either. It can come in a lot of different forms.
Right. Absolutely. Well, I appreciate the specific example there too, because that really puts it in concrete terms. I would like to know more about this investment strategy versus growth strategy. So it sounds like you're saying that, hey, I want to buy farmland, but it's not really my business's growth strategy, so it can actually put a strain on the growth strategy. Is that what you mean by that?
I do, and I don't. Let me revert back a little bit there, Tim. I want to make it crystal clear. There's nothing I would rather own than farmland, right? I mean, I would trade my family's pet for farmland, but it doesn't always mean that it's certainly not. But it is not a growth strategy. It's what we do. It's an investment strategy for us. It doesn't mean that some people it could be a different growth strategy for them, but capital is finite, and it is very capital intensive, as everybody knows. And I can't let my investment strategy cripple my growth strategy. Does that make sense?
Yeah, no, it makes perfect sense, and it's a really important distinction, because I do hear that a lot of people like, hey, I want to buy farmland, but I kind of need to sort of dilute my profitability as my farm overall to do so, because it's so expensive. It's such a massive upfront cost. And Daryl, is that what you're seeing from other farms that you work with at Uncommon Farms as well?
Oh, absolutely. And there's little opportunities, like Kyle said. They come at different times and always at the most inopportune time. But I mean, anywhere from the land that you're currently farming to a piece of ground that maybe used to be in your operation that's not today, or used to be in your family, and it says, well, this is my chance to kind of get it back. And yeah, Kyle made a very interesting point, and it's not a point, but it's a reality that these investments need to be funded out of profits, because it takes the profit in order to pay down the principal and interest, and in order to acquire those assets. So is your business in a financial position in order to make that investment? And how will you? I've never met a farmer that won't accept the challenge of being able to get the work done, of what those new acres represent. But and what does that lead to? Are these new acres in the business, or these existing acres we're farming? So, how do we approach that financial transaction of acquiring that land, but then also what's that impact holistically to the business? We'll have to add acres. We'll have to add new employees. We'll have to add new equipment. What's my storage situation look like? And there's a myriad of things that go along with that. But what's the transaction? Is it right for me? What do I do next? After I've passed those couple of tests.
Right. And Kyle mentioned the landlords he has that think of him first and call him first. But it strikes me that another part of the problem is when that doesn't happen, right? When you're like finding out after the fact that this land is either traded hands or is about to trade hands without getting a shot at it. Do you run into that, either Kyle or Daryl? Do you guys run into that?
Absolutely. And I don't know that that's always malicious in intent, but it
Right.
just it does happen. I guess I'm probably more flattered when I learn about it first, and but then I have a decision to make, obviously, and that it can become problematic too. But yeah, no, I would call it, probably 50-50, Tim, in my experience. Sometimes I know about it ahead of time, and but there are times I certainly do not, or that it's already, it's already been decided that it's going to go to auction, and the auctioneer calls me saying, hey, that farm that you've been farming for the last 15 years, you have some soil maps that we could have on it?
Right.
I mean, that's not a particularly wonderful conversation to have. I always hope that it goes more transparent than that, but sometimes it doesn't, and that's just how it goes.
Yeah, that's an awkward way to kind of find out how your future could be impacted with those things. And a lot of it goes back to how do you manage those relationships with the landowner? Do you have a clause within your rental agreement that says, I get first right of refusal if this thing does go up for purchase? Do you make that intention clear to that landowner that you've got another generation that you're looking out for, not only of their interest but also of your farm's interest? And as Kyle mentioned, when you've got investors involved, they probably are more interested in what the transaction looks like, what those market conditions are. So maybe understand what those conditions are for the investor that's going to either trigger to cause them to want to redeploy their capital differently and how it impacts your operation and as a result.
Yeah. Well, Ben, I want to bring you in here too. I know you've spent a great deal of time researching this very problem. So, are there aspects of the problem we haven't talked about yet, or what kind of surfaces in your conversations that you have with farmers about this?
Yeah, I mean, I think the biggest one is risk. So, I mean, you talk to MBS, you talk to a lot of the Uncommon Farms folks. They're thinking very proactively. But what happens if, especially a large landlord that you have, surprises you, and what are the implications for your operation? And I don't know another industry where you could lose 5, 10, 15% of your revenue base like that, essentially overnight. And that can have very significant impacts on the rest of your profitability. And so that it's not just, disciplined growth like Kyle and Daryl both talk about consistently. It's defense and making sure that the security of your operation, your legacy, is in the right spot. So that proactivity is incredibly important, as well as making sure that you are prepared financially and have the discipline financially. And that's maybe the other thing that I just kind of bring up is it is the problem with being disciplined is that you miss out on some opportunities, but you're not going to have those opportunities or have a business the longer term without being disciplined. And that's really the catch-22 that we see a lot of farmers in today.
Well, we do have our first attendee question, and so for all of you tuning in, if you have a question, please feel free to use that Q&A icon at the bottom and ask a question at any time. We'll get to this first one. It's from anonymous attendee. What are your thoughts on the trend on land prices in the next couple of years? I think you all have probably seen the same thing I am, which is over the long term, it doesn't seem to be going down. But the short term, I guess we could experience some volatility. What do you think as far as, your thoughts on the outlook? And is this important question for farmers to be asking in this whole conversation about, like, are we bullish or bearish on land, short term and long term? And Ben, I know let's have you start on this one. What are your thoughts on that as you've been looking at this problem?
Yeah, I mean, I think if anyone thinks they're going to predict that market and can predict the macro factors, I'd welcome you to come join Fractal or make a lot of money in another way. And I think this morning was a good example of that. I think most folks, if you go talk to them out in the countryside, or you're even talking to large institutional investors that have it, they would say, hey, land's had a bit of a run up, so we'd expect things to be fairly stable, and then we don't know. Well, today we had a surprise inflation print that was a little bit higher than anyone expected. So what does that mean? Well, could mean a lot of things in terms of both interest rates and commodity prices, where everything moves there. And I think that's when we talk to investors, what they're really looking for, and a lot of both individual investors and larger investors, they're looking for the long-term view of farmland and kind of the short-term relationships that exist in terms of that inflation protection. And so I don't see the inflows into farmland slowing down at any time. And if you look at farm balance sheets that are still strong, there's still a lot of farmers that want to buy land. And so if you're kind of sitting on the sidelines waiting for land to go down, there is a high likelihood that you're going to be sitting on the sidelines for a while on that, if not forever. And so I think it's really important to know, the discipline of your operation, like Daryl talks about, to know your own kind of deal by deal price, because it's really hard to game the market and time any market. And in farmland, you kind of see a long steady up into the right, because supply and demand, is a really important thing in the short and long term. And you can't really argue with it when it comes to farmland.
They're not making any more of it, as I think everyone's grandfather has probably said, right? Kyle, and you said earlier, there's nothing you want more than to own more farmland. Can you help us understand the reasons? Is it because you're just endlessly bullish about the value, or is it more operational for you?
Well, it's a little bit of both, and it's a legacy factor actually for me, Tim. And so first off, I'll give you my quick prediction. I'm a short-term flat, long-term bull, and I think that I would actually be a short-term bull if it wasn't for maybe a bit of a drawback in the commodity markets and some interest rate factors. I think I'm actually surprised that there hasn't been a bit more of a pullback to this point, but I think that there is still more appetite than there is supply, and that's what I think keeps us flat for the short term. But long term, I'm a bull. This has been a legacy piece for me and my family for a long time, and as the best time to buy farmland is when it's available. And no one ever, a wise guy told me, my dad told me, no one ever bought a piece of land and thought, man, I really got a deal on that. I really stole that property. What typically happens is that a farmer bites off a little more than they can chew, and then they just chew it. And so that, but long term, that has been a strategy because it's a long term play for everyone. Even in I mean, I'm only 45. I think that's still young ish. And early on in my career, there was a really great farm for sale that brought $3,600. And I was like, the only thing to do with $3,600 land is sell it, not buy it. I mean, that farm's probably, I mean, worth 5 times that now. So that tells you how wise I am. So to me, a guy told me also is that you're either in the land market or you're out of the land market, but you're not kind of in the land market. And so to echo Ben's mark, I would say if you're interested in land, the time to buy it is when you're interested, not looking for a dip, because you'll be looking for a long time. Not that there aren't. So when you go to purchase a piece of property in the immediate time frame, yeah, are there differences in land, and are there some deals that are better than others? Absolutely. So try to find the best deal that you can along the way. You won't want to overpay relative to the market. But if you're somewhere flat to slightly under what the market is, you got to call that a good deal, and for the time frame that you're in, and know that over the long haul that is a great investment. I mean, there for 100+ years, U.S. farmland has been a 12 to 15% return deal, and doesn't matter. You can go through recessions in the 80s and every other thing. That is just a between the cash on cash and appreciation, you can just expect that, and I would expect nothing less. So that's a long way of saying it is a long play for me and my family, and certainly that's why it's an investment strategy for our legacy.
Yeah. Yeah, we're definitely a lot better at printing currency than we are at making farmland, aren't we? So if we're all sitting here, we're convinced, we're bullish. We're here because we're bullish, right? The question is how. What's the playbook of making this happen? I mean, there's fewer and fewer, kind of opportunities as the increased competition for land is out there, and the price on both the per acre basis and the amount of acres in a transaction has both continued to go up. So like, where are we supposed to get the cash to make this happen, right? So let's pivot to that. And I think, what I'm already picking up from you guys is like, being proactive is a big part of it, being ready, right? When that time is going to come, because you never know when it's going to come. But what does that mean to be proactive, Daryl? I wonder if maybe you could just expand on that a little bit more, on what we mean by be proactive. What does that look like in real life? What does that look like in practice?
Oh, absolutely. I mean, you got to be ready when these opportunities come. And for us as coaches and financial experts, I mean, what we do is work with our members to help them understand what the current financial position is. From their balance sheets, what's the historical trend of their profitability, how have they managed their capital in the past, and then what dollars are available for that growth. Because growth really is all about how do I pay down debt, and how do I acquire those assets, and that's what's going to help me build those businesses and build equity going forward. And that's what we're trying to do. As we look at ratios, what's my working capital position? Luckily, we've been most producers and members that we work with have been in a position the last few years in order to have and build strong working capital. As the market kind of softens here a little bit, maybe that's short-term softening, but there's a little bit of biting going on around that, and chewing back on and clawing back some of the working capital. But what is that? What is that number? Understand what that number is. What are the strong key ratios? What's our debt to asset position? What's our debt service coverage margin? Because those are things that are current pace of what our business and the ability of our business is in order to meet those future financial commitments. And then, how do we model that out on a balance sheet and understand what those implications are? How do we, it's tough to build a budget around some of these what if scenarios, but we encourage our members to have conversations with their current lender to help them understand what your growth scenarios are, get their input on what your financial strength is and the ability for you to do these things. And then, understand what types of deals can we take on, and be prepared to have those kind of numbers in mind. What are the implications of these purchases? And then just look at all the alternatives. And I think that's where Fractal really comes into play, is understanding that this is an alternative to traditional lending that we need to have and be available to us as an option, and to figure out what's right to deploy and what's the right time to deploy this strategy.
Yeah, and we'll definitely get to more conversation about fractals specifically. I would like to follow up on something, Daryl, which is, as you meet with new farmers, especially, I imagine everybody kind of feels like, hey, I know my operation pretty well. I think most people would say we know our operation inside and out. What are the first questions that you ask them that they're like, I hadn't really thought about that, and I probably should know that?
Yeah, I mean, just what's your operational efficiency? Do you understand what your balance sheet looks like? Can you rattle off some of these ratios? No, most people can't get that. I totally understand that, but about every farmer I've ever looked at says, well, yeah, I can figure out how to take that on and get that work done. But what's the ripple effect? If I buy this piece of ground, and do I need to add additional storage and equipment, labor, et cetera? Because there's capital costs that are associated with those things. If I add this land, does that put me into a new line of equipment? And am I going to be now at the bottom tier of that equipment, where I'm going to be totally inefficient, which causes me to drive growth at a faster clip so I can regain some of that efficiency back in the operation? So when you look at this transaction of acquiring land, that's one thing, but how does that ripple through the operation? And is this going to be a good thing for me long term in my operation long term? Is this the right time to make that investment?
And Kyle, what does this being proactive look like for you? I mean, is this a written plan? We're saying we're going to do X, Y, and Z so that we are in this position for this amount of land to come up for sale. Like, give us some of the nuts and bolts of what proactive, being proactive looks like in this area.
Yeah, Tim. So I think that there's two different ways, two different things to think about being proactive, right? And so let's put the financial portion of it aside. Let's just take a look at the relationship piece. And so for me, it's about managing landowner relationships, both relationships that I currently have or have or may have, and I'm not farming their farm, but just it's about managing relationships in general and keeping the communication lines open. So let's talk about landowners that I currently have. And so it's about, making sure that that I'm being diligent about a plan for having so many touch points per year per landowner. And what are those touch points and how are they relevant to them? I have many landowners that are much more interested in seeing pictures of my children than they are learning anything about what I've done on their farm. And I have some folks that don't probably even know that I have children. So, I mean, we have, both ways there, but it's all about talking to them about what's relevant to them, but being diligent and being purposeful about having those annualized touch points. And then transparency. Our operation has different times we've talked with folks that we may be even transparent to a fault, but I think that there's our landowners are a very big part of our business. They're a big part of our relationships, and being transparent with them, not only about what's happening agronomically on their farm, but what the impacts of the financial markets and of the land market really means to them. Also being proactive about managing expectations of the next generation of landowners. And there's only so much you can do, but I guess it would be foolish to not at least try to continue to have those touch points with landowners. So to me, that's one way of being proactive. The second way of being proactive is is from a financial standpoint, keeping, knowing that you may not have a deal in the works today, but it seems like right around the corner there is a deal. And so am I well positioned to be able to manage a deal at any given time? And if I'm not in position, then what else does that look like? Is there another partner that I could bring on to help manage a position? Or is there, sometimes all we do is facilitate the transfer of ownership of a piece of property from one of our landowners to another. And that's a good healthy transaction, a good healthy relationship. and folks can be. I'm satisfied with that relationship as well, knowing full well that I can't. It takes too much capital to do every deal, but then also being prepared with your financial institution, with debt financing, and then obviously we'll get into some of the things that Ben and his team are working on as well. But again, even if you're looking at alternative financing like what Ben is talking about, I think you still got to be very proactive in that. Don't call Ben when you've got a deal on your doorstep. Call Ben well in advance of that, being prepared for the deal that's around the corner.
Right. There you go. You got Fractal's got a new slogan. Call Ben. Just call Ben. No, and I think Ben will welcome that call. But I'm curious, when it comes to the landlords, how forward are you with this? Like, hey, I would like to buy your land when it comes up for sale, or is that you kind of get a feel for like, all right, is that going to be off-putting to them? Daryl and Kyle, I guess both of you have, I'm sure, found yourselves in this type of situation or dealing with this. How do you proactively manage that relationship in a way where they do think of you when that land becomes available?
Well, there's a lot of different ways, Tim, and I'll jump in on this, but I think it's just, again, with that transparency and just simply say, I'm a 5th generation farmer. I would certainly hope there to be an opportunity for my kids long term, and if you are, we want you to own your property as forever. We love the relationships that we have, but in the event that you to decide to make a change, boy, we would really like an opportunity to at least talk about it. And that's a pretty easy conversation to have, honestly. It doesn't really matter what type of an owner you're talking about. Now, there are some leases and some things that you can put into leases to more formalize that. That's a little bit more sensitive depending on the landowner, and to each his own. That's absolutely fine. But I think we're doing a disservice if we at least don't have a conversation, every so often with our owners, to be sure they know that in the event they're ever looking to make a change, that we would sure like to be the first call they make.
Yeah, and Daryl, were you wanting to add on to that? I saw you chomping at the bit there.
Yeah, just 100% agree with what Kyle's saying. Be open and transparent with that landowner. If oftentimes they've got next generation in line to know and understand that next generation, and get clear to them that you're to help with that transition, whether it's them still owning that farm as the next generation, understanding who you are as their current tenant, or just if they're there, what are those scenarios if they want to sell that land? Do you have somebody that do you want to buy it yourself? Do you have somebody that could buy it if you can't? But being open and transparent, and just making that as smooth a transition as possible, and just being out there and open about it. So
excellent. All right. Well, I've been taking some notes here. A few things that come up. Number one, be proactive about that relationship you have, with that landlord. Number two, make sure you have the labor in place to actually expand to new acreage. Same thing with machinery and equipment. Do you have the machinery and equipment to actually make this work? And then just in general, make sure that it fits your operation the way you currently farm. Then, of course, the big one, which is capital. Like if we're looking at like a 40% down payment on a very expensive piece of ground, we really want to own it. Where's that capital supposed to come from? Ben, I think this is probably a good place for you to jump in.
Yeah, and I guess maybe on this conversation, we've just been talking about like the deal that you're doing right now, and that's not enough for a lot of farmers. If you think about bringing the next generation or whatever your plan might be, you likely have a goal to grow at a certain level, just given the benefits of economies of scale, and you need to be looking not just right now, but a year, a decade into the future. And this problem gets a lot larger. And so when we think about that problem, at the end of the day, ag bankers and the debt markets do a great job. Like, we are very, very fortunate in this country to have a fantastic debt system. The problem is they're good underwriters, and they go to 40 to 60% of the value, like you said, Tim, which means that you need to have a lot of cash to go buy another piece of ground. And if you just look at the margins of agriculture, they're continuing to decline on a per acre basis for that farmer, just as you see more and more scale out there. And I think even on rented acres, you're seeing even more competition for that land that's coming out with things like rental auctions and custom farming. And so you're getting, frankly, fewer opportunities to make more on that rented ground and to generate that cash. And so there are a lot of options out there that aren't always equally available to go do this. And Kyle and Daryl have talked about a lot of them. Sometimes it's getting another investor to go buy that full piece of ground. If you can, sometimes it's having maybe you know the dentist or a high net worth individual who can come in who you have a great relationship with. We love those. What we're trying to do at Fractal is to bring broad kind of standardized capital in alongside a farmer to help solve this gap. So we'll come in and we'll do minority investments, passive, like you said in that intro, Tim. So farmer maintains control. They're on the title. We lock that investor in for 10 years. So you don't have to worry about just somebody kind of pulling that rug at any time, especially if the market's doing really well and they want to reallocate that portfolio, whether they're in LA or somewhere else. Again, that's their prerogative, but in our case, we use a contract to kind of protect that. And in return, an investor is getting to get access to the best land managed by the best farmers. And we just think it is a better financial bet for an investor to come in alongside someone like MBS Family Farms, the folks at Uncommon Farms, and a lot of folks that are on this call, because they get access to the best deals and they're managing as if they own it because they actually do. And that is just a beautiful thing for those of us that believe in, self-interest and local agronomic knowledge.
All right, so yeah, let's lay this out in detail here. I'm a farmer. I'm going to take Ben and Kyle's advice, and I'm going to call Ben early and say, hey, I might at some point want to buy land. What options are available to me? I'm going to get set up with Fractal, and then what's that look like for me? What am I giving to Fractal, and what's Fractal giving me back in return?
Well, the first thing we're going to do on that call is we're going to explain the contract and make sure that it's a fit for your financial situation. So we're back to what Daryl was saying. What's your overall kind of state of your balance sheet, state of your business? That's incredibly important context. This isn't a tool for everyone, but let's say you have growth goals. Maybe let's say you want to make sure you have enough buffer on that working capital, or you want to be ready for that next deal, especially given those great conversations you had with your landlord. So I need to plus up that balance sheet a little bit. What we're going to do is we're going to actually go and look at a field that you own today. And we're going to go get a valuation on that field. And so what we're doing when we're valuing that field is we're just trying to look at what the market says is out there. We're looking at your management practice, at your agronomic expertise. We will pay more for yields. Call us old-fashioned. Even though we're a relatively new investor on the block, we really like yields and cash flows. And so great agronomic operators get great deals with us relative to maybe where there's underperformance out there. And you're going to sell up to 45% of that field. You can have debt on it, but up to 45%. And you're going to take the proceeds from that sale, and you're going to go make that next investment, next piece of ground. Maybe it's grain storage, the other things that Daryl was talking about. And we're not going to tell you how to use that capital. You go use it. We're not involved in that other deal. And then on that field that we invested in, you're going to pay an annual payment. And if you're using soil health building practices that are great agronomic practices, you're going to get a discount on that payment. And for that 10 years, you just pay that payment in cash. You can also pay it in equity. It's a little bit more expensive, but really at the end of the day, you maintain control agronomically. You're on the title. Pay that annual payment for that 10-year period. You can buy us out at any time ahead of that. And then at that 10 years, hopefully we've done a good enough job of being a good, supportive, passive investor that's done multiple deals with you, where you want to do another deal with us on that same field. So it's just a renewal. Or you can buy us back out again at that 10 years or at any point before then.
Yeah, and I want to emphasize one thing you said, because it was a good question from Sue in the audience, which is, does the type of farming you're doing affect the financing? Example, cattle, arable, regenerative. You just mentioned if you're doing sustainable practices. Can you maybe just talk a little bit more about that part?
Yeah, and just to be clear for Sue, we're doing commodity row crops out here. So we're primarily Midwest, Great Plains, into the Delta, where you see kind of corn, soybeans, cotton, small grains, kind of machine harvestable row crops. Like that's what we're talking about. We don't do pasture today, and we're not doing kind of California almonds as an example. But we are big believers in you can call it regenerative agriculture. My family in North Central North Dakota just called it farming. Doing great practices that build soil health for the long term. So farmers that are thinking about farming for the next 10, 20, 30 years, and these practices don't work everywhere, but where they do, we will give a discount on the annual payment. Ends up being about 20 basis points or 0.2%. So let's just say farmland's $10,000. That's $20 an acre. And that's a pretty material payment relative to maybe some of the other payments you can get out there that I know Kyle and I have a little experience in.
And when we were preparing for this webinar, Kyle said something that I want to ask you about, Ben. And Kyle said, I have to keep reminding myself, this is not debt. Can you talk about what he meant by that, Ben? What does he mean?
Yeah, I mean, it isn't debt. We're not trying to go compete with the banker. Like, we think you should use debt alongside Fractal. Like, this is equity. So if maybe you're not a finance nerd like a few of us, and my team's laughing at me right now if they're watching. What equity is we're coming in and we are sharing that risk with you. We're not saying, hey, at the end of the day, like if this defaults, we get the whole thing. Like, we're going in and farmland goes up, we go up with you. Farmland goes down, we go down with you. And so what that means is you don't need a down payment for us. You're not paying off principal with us. And that makes the ongoing cash flows a lot easier to handle. But more importantly, we don't have that same problem that the great ag bankers that exist in our industry have, where they're waiting for 40 to 60% of that value to come down for cash. Like, we're actually helping to solve that cash as that equity provider.
Great. And along the line, Scott asked a great question that I should have asked, but my mind went elsewhere, which is you mentioned practices qualifying for discounts. What practices exactly are you talking about?
Yeah, so strip-till, no-till, so reduce disturbance of the soil, cover crops, in-season nitrogen application, edge of field, so think riparian buffers or wetlands protection. We give additional bonuses if you're doing those practices for 3 or more years, because a place like North Dakota doing continuous no-till, where no-till can make a lot of sense, has its own benefit. Same thing with cover crop usage. And frankly, we've had a couple of farmers that are doing really great localized practices that maybe aren't as generalizable. If you're doing something you think builds soil health, we've paid out discounts on that too. So we have some mechanisms for. We had some folks in Iowa that because of the derecho, they lost a bunch of trees and they turned those trees into compost along with a bunch of their manure, and that built a ton of soil organic matter. That felt like a fair thing for us to risk share on that deal because it was a darn good agronomic practice if you looked at their yields.
Very cool. Well, Kyle, I want to hear from a farmer here about you have been thinking about Fractal for a while. Some of us are hearing about it for the first time here today. From your perspective, what about this appeals to you based on the conversation we've had so far?
You bet. So it is certainly I think that this is just like any other tool. It's one of the many tools in the toolbox, and what a great one to use in conjunction with other tools. It may not be for everyone, but I do think where it has a fit, it has a really good fit. I've had to train myself, like you said, to not think of it as debt. But the beauty of that is that it's risk sharing right alongside of me, and so in true farmer fashion, I had to get over the fact that I was concerned that Ben and his team's investment in my property, that it may go up, and that that value in 10 years is more than likely going to be more than what we value it today. That's a good day, Tim. That's a good day. If I have to buy Tim, or if I have to buy Fractal out at year 10, and it's higher than it was in year 1, that's a good day because the rest of my property values went up as well. It really becomes, and Daryl will probably speak more wisely to this because I use him as counsel even. What do I do with those dollars that I've got that I have from Fractal, and do I make wise investments? Right. To me, it would be to make new property investments so that as there's appreciation in land value, if I've taken money out of one farm and I've put it into another one, those ought to appreciate at a similar type of rate. And it just now we started a flywheel, and we can just continue to do this over and over again. But my farmer mentality wanted me to say, well, so if land values go down, I don't owe them as much. That's not a good day. But they are taking the risk alongside me in doing that, and so that feels good. I think that's the right mechanism because and there's an annualized fee for the use of the capital along the way, as there should be. I mean, any capital gets a use fee. But I like the idea that our interests are aligned. We're right alongside of each other, and then at the end of this, it really becomes important for me to make the right decisions with that new capital. And what do I do with that to make sure I invest it wisely?
Yeah, Daryl, let's get you back in here too. He called opinion, on your counsel.
Yeah, he did, and I'm appreciative of that as I have been through the years. But the thing that we always look at is that capital should be really deploying or returning profits at a rate greater than what the interest rate would be on that money you would be deploying or offsetting. and that would be the positive gain. So if you're going to do that on land, well, that's an equal. But so what are the devices that we can reinvest in our operation that makes us more efficient along the way, more profitable along the way? Are we able to get additional rented acres with that to look at the growing crop, which would be a higher returning asset than traditional farmland anyway? So can we use those dollars to really make money within the operation, make us better along the way, make us more efficient, more profitable? And then that in turn allows us to, as Kyle said, continue in the rate of that flywheel momentum. Then we've got more capital, more equity down the road in order to build from. We stack that on top of the hopefully gaining equity in land, and then now you've got a great combination in order to go deeper into that next piece of ground and to continue to build your equity in your operation.
Yeah, and Tim, if I could add, I would just say, like, we're not a silver bullet here, right? Like, at the end of the day, a great, well-performing farm operation, both agronomically and financially, like, will do well with Fractal. But like, that operation is the star of the show, because if it's just if it's a middling operation or operation that maybe is kind of not looking to improve or get to that spot, and then that's not to say what they're doing is bad, but we need what Daryl said, like a farmer that is driving and building and improving. They will do well with equity capital. Otherwise, maybe other tools are the right option for them. So it's not a tool for everyone, and we're not a silver bullet for the capital need either.
Great. All right, we've got some excellent questions pouring in here. We do just have about 10, 12 minutes left. So if you have a question, don't sit on it. We might run out of time, but I want to get to a couple of these. Ben, a couple of things. First, I want to call out that Kyle mentioned. Number one, he said, "Hey, if in 10 years the price is up, that's actually good for me." But also, a farmer doesn't have to wait 10 years, right? It's like a minimum of 2, and then at 10 years they can either sell, or if there's an opportunity for another Fractal transaction, that could happen too. Are those things correct?
Yeah, spot on.
Okay. And then Dylan is a great question here. So Fractal, if he sells 45% of existing land to Fractal, is the payment from the farmer 45% of the market rental rate? And I think a similar question is does the payment follow interest rates? So maybe you could kind of speak to that payment.
Yeah, so I'm going to divide that question into 2 pieces. First one is the payment is just on the share that we take. So if we're taking a 45% share, the payment is just on that share, not on the whole thing. So that's kind of point 1. Point 2 is just then what's the payment rate itself. And so today it's about 4.6, 4.7%, and then there's those 0.2% discounts for those qualifying practices. So that's higher than at least most of the farmland that I know. That's higher than rent, but it's significantly lower than where interest rates are at today. And we typically will kind of float in between. As we see the cost of capital rise, like, we will have to move with it in many scenarios, not always, but you'll kind of think of us as falling in between those, because we got to make it fit from a cash flow standpoint on an ongoing basis to make sure that we're not adding undue kind of financial stress onto that operation. We underwrite and get for that. Back to Daryl's points around debt service coverage ratios and those really boring basics that are the risk management that you absolutely need to have to make sure that legacy in that business is on solid ground.
Then another anonymous attendee asked, does Fractal have a documented lien on the property then?
Yes, we do. It's often a second position behind. If you have a loan on that would be a first position. So we'll come in behind that. And obviously, you have the right to buy us out, and that's documented in the mortgage doc and the contract itself.
All right, I'm going to keep firing them at you because they're pouring in here, Ben. What about beginning farmers? What we're talking about is sort of like investments based on existing land. If it's a beginning farmer, is there anything there?
Great question, and one that kind of hits me in the stomach from John there. We do need a minimum of 20% of the field, the farmer, to have equity in that. So if it's a completely brand new field, brand new farmer, probably not a fit today. That's something I really want to be able to support in the future, but not something that's there. And so typically what we'll see is somebody gets a great FSA new farmer loan. They'll pay that down for a couple of years, but plus you get a little bit of appreciation in the land, and then we're able to come in and call it anywhere between year 2 or year 6, depending on where the market's at, to help them. So again, we're not a silver bullet. Like, we can help accelerate that. Something we're working on, and that's a great question from John. And that's a massive need we need to be working on, us and many other people.
Yeah. Yeah, these are all fantastic questions, and we're not out of time yet. So if you have any, please send them our way. But Scott had one, which is what kind of documentation is needed to show that you qualify for the discounts? How are you making sure that the discount you're given is actually ending up in a real practice?
Yeah, that sounds like somebody who's been through a carbon program before. So it's not a carbon program. Though if you are part of any program that essentially documents those practices themselves, we'll take that documentation. We always want to use what you're already generating for our own documentation to make it as stupid simple as possible. Many of these practices to look at tillage or cover crops, you are able to use remote sensing many times to go do that. We're also not above going and putting boots on the ground, mainly so that we can either go have a cup of coffee or a drink with you, and also look at the field that we're investing in. So there is a lot of boots on the ground as well. And then oftentimes it's just plugging into your precision ag. Something like in-season nitrogen is a good example. Like, it's kind of hard to tell if you've been doing in-season nitrogen or not. And so sometimes you need to get boots on the ground, plus kind of just show what the plan was that year. But it should take less than 15-20 minutes and be things that you already have on that annual basis.
All right, well, guys, we've got a few more questions to get to here, and I do want to give you each a chance for kind of some final comments. But before we get there, we've got one more poll question that everyone in attendance would love to get your feedback on, which is just if you want to speak to someone from Fractal to learn more about everything we're talking about here, you want to ask some questions that are maybe unique to your situation. Maybe you're thinking, I'm not sure I want this public that I'm asking this. Just go ahead and fill out that poll question, and somebody would be glad to get in touch with you to talk about your specific situation and if Fractal might be a fit. One thing I appreciate about what you're hearing from Ben here is he's willing to tell you when it's not a fit. This isn't a silver bullet. This isn't a solution for everybody, but it might be for you. So if you'd like to, go ahead and complete the poll question there, and I'm sure they'd love to talk to you. But let me get back to a couple of these questions before I let everybody get back to their busy day. Let's see here, which to choose next. Yeah. So Sue asked, what are the biggest hurdles for farmers in these situations? What, in Ben, I'll let you start, and then Kyle, if you want to answer more from the farmer perspective, you could kind of add on there. What are you hearing as far as hesitancy or pushback from farmers in this?
Yeah, I mean, I think this is a new product out there, and so you have to do your diligence on us, especially if you don't know us. We're lucky enough to know a lot of folks in the space, and so that's usually a good first step. But we want people to make sure this is the right tool. We want you to go and look at us alongside a lot of the other advisors you have. You're often your banker, maybe it's your CPA, maybe it's Daryl at Uncommon Farms, or some of the other coaches that are there. We want you to put us through the ringer, because we don't want to just be there for this deal. We want to be there for the next one and the next one and the next one over the next 10, 20, 30 years. And so really it's the newness. We truly believe in the math. If you have a playbook or an operation that can return more than kind of the land investment we're making, we really believe in the instrument. But you need to be sure of that. And we really want you to be sure of that. And that's sometimes a journey, especially when things are busy on the farm, which is pretty much always.
and Daryl or Kyle, anything to add there about, what are the important questions that a farmer asks to make sure this is right for them?
Yeah, Tim. In the limitation of time, I mean, I just would encourage put Ben and his team through the ringer. Be sure that you're asking your trusted advisors their opinions of it, and then also be sure that they can be in contact with them. That's Daryl and I have worked together for quite some time to really get our understanding around this. And I can't tell you how many times, again, I have to be reminded that this is not debt, but that happens in our conversations quite often. But just really the biggest hurdle so far has been the space between my ears, and just getting my mind around what this really is and how much different of a tool this is than the other ones that I've used in the past.
Yeah, and Tim, as we work with our members, and what we do is just basically we want to entertain the conversation and get to identify that this is an alternative that we want our members to be looking at.
Mm-hmm.
We get everybody connected. We'll work with them alongside in order to make sure they've got their financial docs ready to go, to help do the modeling, help build the budgets in order to make sure this is something that can work out. And then we'll facilitate getting those documents to Fractal, helping them with whatever they need. But basically just staying involved and assist that farmer in the conversation to say, is this the right thing for us? Does it make sense for your business? How does everybody win in this situation, in this scenario?
Right. And Daryl, if somebody's listening and they're like, I'd like kind of someone in my corner in advocating for me and helping coach me, can they reach out to Uncommon Farms? I mean, are you all looking for other farmers to work with, and who might be the right person in that situation.
Absolutely. We work with producers, across North America, and we are obviously available on the web, uncommonfarms.com, and just learn more about what we do and who we are there. It's got all our contact information there as well. And we just love to help however we can, and whatever that looks like. So.
Great. Well, while I got you, Darryl, I'm going to put you on the spot for our last audience question we'll get to today, and then give you guys a round of kind of final comments before we take off here. But the question is, where does one put cash in the short term, 1 to 5 years, to save up for these land deals that come out of left field? In addition to calling Ben and all the other proactive things we talked about, where should we be looking to put some cash?
Yeah, the thing I hear very common is just look at the rates on a lot of these high yield savings accounts, money markets, CDs, those types of things that are very low risk, but have a very, very high stable return that allows you to get access to in a quick time frame if a deal does pop in. And again, if there's something you can do in your business today to make more profit and enhance the quality and the efficiency of the work that you're doing, to make you better long term, and that provides a good return on that cash, then reinvest in yourself. That always makes good business sense.
Great. Thank you guys so much. I love this topic. I'm really glad we're digging in, and it's nice to hear about this new tool that's available with Fractal. Let's give kind of 1 more minute. Anything left unsaid, this is your last chance. We'll start with Kyle, then we'll go Darryl, then Ben.
Yeah, not a lot left unsaid for me, Tim, other than, sometimes I'm my own worst enemy on new products and new technologies, and just getting out of my own way, it can be difficult. But at some point, I think the best way to learn is to jump in, and there's, opportunity to do that in a fairly large way or a fairly small way to start off, and to get the process started. I've learned so much of just going through the process, and I know that the next deal will be, I'll be more comfortable, for one, and for two, it just I'll have many of my questions answered. So sometimes the best way to figure it out if the water is wet is to jump in the deep end of the pool.
All right, and Darryl.
Yeah, I just Uncommon Farms really appreciates the opportunity to be able to bring this type of an option to our members, like MBS Family Farms and all those that are part of our group, and also just feel very fortunate to be able to bring a new exciting concept to this space, and appreciate the strategic partnership that we have with Fractal and the work they're doing with our common member. So thank you, guys.
Thank you. And Ben.
Yeah, I mean, I think at the end of the day, when we look across the landscape and look at, what farmers are facing and just the complexities of farming today, and then seeing the capital challenges that exist on top of it, I just hope that folks that are listening and those that might listen after are really willing to kind of dive into look in the future. And that might not be with Fractal. That might be with other options. And you know what? That's just fine. Like, hopefully we can earn your business, and we'll work our tails off to do so. But there's just such a massive need out there. And it's just math at this point. And we want to keep farmers on the land. We think that is a damn good investment, because farmers are best positioned for that. And this is one of those really unique win-wins that's out there. And so we just hope folks are able to work with their advisors, work with their families, work with their business partners to make sure that we're still keeping good, strong farms. And you look at that sign over Kyle's shoulder, like, that matters a lot to all of us. That's both financial and personal. And so hopefully we're able to be at least part of the solution to thread that needle.
Man, couldn't have brought it home better myself. Thank you very much. Thank you to Fractal. Thank you to No-Till Farmer. Thank you to Uncommon Farms. Thank you, Kyle, for being here. All of you guys really enjoyed the conversation. And if you haven't yet responded to that poll, I think the poll might be closed, but you can always reach out to Fractal anytime if you'd like more information. With that, McCain, I am going to turn it back over to you, sir. Thank you very much.
Yep. Thanks very much, everyone. Thanks for those awesome questions, good answers, good discussion today. Just a reminder, today's presentation, it'll all be available on the No-Till Farmer website. If you'd like to review it or go back, share it with anyone. And then you'll also you'll receive an email in about 48 hours from now directly with that link. So make sure you look out for that. And as some of them have already mentioned, if you're watching this later on and you'd like to be contacted by Fractal, you can reach out directly to them or to us, and we'll put you in contact with them. And if you have any questions after the fact too, feel free to comment, and we'll make sure we get those answered for you. So on behalf of Fractal Agriculture and No-Till Farmer, thanks again for joining today. Please feel free to reach out if you ever have suggestions for other webinars you'd like to see from us. And go ahead and enjoy the rest of your day. Thanks, everyone.